All right, like 1 minute before NY Open. Um, let's see what we get. This whole area has just been consolidation. This is what I would deem the accumulation phase. So let's see which way we manipulate. Let's see. 5 more seconds. All right, ding, ding, ding. New York Open, great. Let's see. See, in this press session, I don't really have anything to do with. Like, we didn't really. Well, I wouldn't say we broke market structure. Really, this is just raw consolidation. So let's see. See what the Fed probably has. It looks a lot different. Yeah, this first like 5 to 10 minutes after New York Open is when we just kind of bleh. It's not really much, so if nothing really happens, then I mean, if no entry really forms, then that'd be kind of annoying, but I can't be too mad on it. It is what it is. Okay, go ahead and push on up. So while this is running higher, the dollar should, yep, see, hit the order block. Oh, that was back at 7 something. Okay, so yeah, we hit the order block, right? The hourly OB, running the range high, and now we're breaking lower. See, so now we want to see the dollar run below this range low as the indices push high. So as the dollar makes a newer low or lower low, we want the indice to make a higher high. See, we took that hourly high out. So ES is above London, the NQ is also above London, and the YM is also above London. That made a, what is that? Okay, that's a higher low. Great. NQ made a higher low as well. And the ES made also a higher low. Okay, so it seems like the NQ is lagging, but again, I'm not the best with divergence, so I can't even though I just went through that, I can't even tell you like what to do with that. I'm just trying to stick with it because my thing with divergence that I'm struggling with is trying to use divergence on the 3 things. Like when it's 2 things, my brain gets it because it's like, oh, 1 go down, 1 go up. But when it's 3 things, I'm like 2 go up, 1 go down. So that means that 1 going down is just running stops to go up. Like I don't know. It'll be a study though. I'll definitely figure out because P-Dub introduced that concept to us with the indices and with his understanding of it and how he showed us. Like getting to know that at least, like as another piece of your toolbox, that would be incredible. Like it would probably days where you maybe would have lost or would have forced a trade. The divergence would have been like, oh, okay, I could chill. So that's why I'm gonna learn that. Before this year is done, I'm gonna be a master. Matter of fact, yeah, that's what it's gonna be. Before this year is done, before September, I'm gonna say before September. So okay, so we took out that hourly high, great. We didn't have the deep draw in liquidity that I was thinking, like maybe I was thinking like a run below, into this area, around this range, and then up, but I don't think, Jesus Christ. All right, go ahead. Let's see what the chart showed. But also I'm wary about these things because these things could be setups. You know what I'm saying? Because if you think about it, right, with the power 3 thing, this whole area, especially these candles right here, this is like the most consolidation I've ever seen. Like, you know what I'm saying? Like open close, open close, open close. Like this is the same range. Like all of these are the same range, right? All of these. So normally when this happens, when we consolidate and blast off, that normally creates a market maker sell model, but this is on a lower time frame. Higher time frame, price delivery is up. Cause see, we poked out of the bearish OB and we took that swing high out. So if we take the swing high out with force, like if the day closes above this and Monday's open, I'm trying to think if next week is a holiday. I don't think so. But if Monday's open, keeps us above this area, or at least doesn't come back to this, that would be a run above a swing high with a gap. So that would be like a short-term shift in market structure on the low. Because technically the daily would be the lower time frame for the weekly / monthly market maker sell model that we're looking for. So, yeah. Because weekly, remember, we want to see the draw up into this order block. So this, like, into this order block and into this gap is kind of where I'm thinking that's like the ceiling, quote unquote, for where we might push up before the next leg down. Because on this run up, we're leaving these equal lows here, just like price has been doing. Set a low, retrace up, come down. Set a low, retrace up, come down. So yeah, all right, back to this. Still running that. Yeah, but us taking off, leaving these lows right here, I don't know. It's kind of iffy. Let me see. I don't like the 10-minute normally is pretty good too. Okay, nothing crazy. What about the 30-minute? Oh, where is it? What? Okay, that's a little weird, but we'll keep going. This is the only part I don't like. It's waiting. Just waiting. Oh, what's that? What are we doing? What you doing, Price? Stop it. That's 1 minute, Sean. Okay, kind of nothing, really. Yeah, if I wanted price to go higher, I kind of want to see the opposite of what it's doing now. I want it to consolidate and then run lower below midnight open and then do the shift in market structure and stuff. But this consolidate to go up, normally that leads to us coming back down to where we started and lower. So short-term price, liquidity to take, I look for these lows initially, and then London's lows. So that, and then obviously below midnight open probably. Okay, so we're in the discount range for that. We ran buy side liquidity. Now it's time to see if a low time frame model forms. At least just like the general market structure of a model. Okay, so you see on the 1 minute, right? There was no real swing low created here, but we still created a gap. And let's see how price would react to that. Because there was no real break in market structure here on the 1 minute. At least to me. I mean, that is displacement, but yeah, see? But if I just went for that because I saw the gap and we went lower, I'd be like, oh, put my stop up here. And then boop, it got tapped. So this move down was really just a retrace into this gap, this 1 minute gap. Confirmation come, but now we do have a swing low here. Lower time frame, but we do have one. I don't even think that drop down was an OTE, even if you use the bodies. Let me see. Bodies of the fib, was it? It was right there, but it wasn't exactly a OTE. It was close though. It was at least below the 50. So technically, you'd have been in a discount if that was your buy, right? Seeing as how we ran above London, so. And now, if price is really bullish or being supported, right, on this 2 minute, we didn't really. Did we ever come back down to this? Yeah, we didn't really come down to test this order block, right? So now we should see if price can be supported at this OB and gap, right? So you draw a fib. You could use the wicks or the bodies. On lower time frame, I prefer to use the bodies because wicks again have little volume. So on the lower time frame, like a 2 minute, this wick barely has any volume relative to the body of the wick. So I'll just try it from the low to the high of that point. So you see OTE for this area would be roughly around like the bottom of this gap in the actual order block range. And then you could set your stop below the swing low if you're bullish, because you wouldn't want price to break that to go lower. At least you wouldn't expect it to. And then with the OTE, like with the fibs, just again the standard deviations, like those are good if you don't have objectives in mind, or if there's no objectives you can see in price. You can use the ranges of these. Like you can use these to sell into. So those can be like your targets. But again, don't just hear me say that and try it. Like back test it and see what I mean. Just like with the Asian range thing. Back test it and see. Okay, this candle closes in like a couple seconds. Okay, cool. So now the middle of this is okay. The middle of this fair value gap is right at the open of that. So Because even if this is a sell model, we might be on like the bullish side of one. Hypothetically, who knows? This is if we dip back down, but that could be like somehow you could frame it, like just have it right at the equilibrium or below. Or you could be a greedy person and try to go for like the whole gap fill. You know what I'm saying? It reduce your risk, but it'll also probably reduce the chances of you getting picked up. That depends, because the range of this gap is 6 points. Okay, so normally 6 point gaps can get filled, but from my studies, not the range of the gap. If it was I want it to be like a smaller gap. Like I like gaps to be like 3 or 2 points or something. But wider range gaps I kind of suck at, because at that point you just kind of go with like the absolutes. Like you try to get in at the absolute top, the middle, or the bottom, trying to like play in a range because it's so wide. But like it'll be annoying because you'll always be moving. Oh, what about here? What about here? If the gap is too wide, just pick the 3 absolutes: the top of it, the middle of it, or the bottom of it. Whichever you feel comfortable with getting into. That normally plays out. Yeah, but if this is a sell model, I think this might be like the bullish phase of it. So you might just keep retracing to deliver price higher. Like higher and higher and higher and higher. Maybe, I don't know. Okay, I think I'm just gonna pause it, because it's going on 17 minutes now. So I'm gonna pause it and then resume it with whatever happens. If I really do believe this here, I might seek entry in this area. The same way I framed it, I might seek entry here, but I'll pause it. Okay, I'm pausing. Now we're in a 3 minute, right? 2 minutes. Obviously didn't come down, and I didn't take anything because the last trade I had was the loss from yesterday. See, 23rd, 24th. So haven't taken any new trades. It's not a new account. See, it's the same account with the the spiral lower D. But okay, we didn't even show a need to come back down to this order block to retest it. And then the 3 minute had this tiny gap. You know, this, I don't know, it's like a 2 point gap probably, or a 1 point gap. Okay, 1.5 points. That's the kind of gaps that I like to see, really, for entry mainly, especially if it's like all the boxes are checked and then the gap is small, because normally you could just go for the top, or the top of it or the bottom of it, doesn't matter, because it's only a 1.5 point difference. So it's not like if it's a 6 point gap, if you get in at the top, you have to be okay with weathering 6 points of drawdown compared to just 1.5 points, right? But we're just stair-stepping our way up. See, do this and come down. And this retracement wasn't even as strong as this one, right? Because this one got into the gap. The second one that made the gap did not come back to that. And then we expanded higher again. So still keeping an eye on this. Still watching. As we near this this gap down from last week. Yeah, that expansion high is crazy. Sheesh. Holy candle. Jesus Christ. Okay, so I think at this point the dollar should be below that low. Okay, it's close. It's close to taking out the range low. Real close. What about the VIX? No. What about the VIX? What are the VIX doing? Because I had the VIX going lower too, to run that this wick here. So it's kind of pushing into that, but obviously not as dynamic move as the dollar, right? Because in cases the VIX can be like really inverse to the indices. But the dollar is just kind of like the easier one to use to gauge volatility. But I just need the dollar to actually let me set an alert. No, stupid thing in the way. Let me set an alert. Only once, crossing down. Oh no, this would be. Oh, it's actually blocking me from seeing it. Okay, range low, broken. Borkin. That's funny. Broken. There you go. Okay, so once it breaks that, I'll know. Back to ES. Back to ES. Yeah, all I'm seeing, especially this area down here, this area is going to get swept, yo. I don't know if it's next week, but all these lows, because anybody going long is just trailing their stops underneath these lows. And the higher we go, the further up they draw their stops. Or they're trying to buy the breakouts. So everybody's technically liquidity. Just you don't want to be liquidated, like to be. You don't want your stop ran, basically. Yeah, I didn't know how long these recordings could potentially be, yo. Like the first ones were like 8 minutes or something. These ones are like 20, 30, 40 minutes. Jesus Christ. All right, it's almost 10 o'clock. Let's see what the new hour brings with the algorithm. Normally, the algo does certain things at certain times. You could just keep it simple with either every half hour or every hour, or the something called a kill zone, which is another ICT concept. I think he talked about the videos you'll see on YouTube are the forex kill zones, but he has mentioned in the indices time kill zones, which is basically just like a specific time of the day where you can expect a high probability or high quality setup to form. Like I think the indices one is, I think he said 8:30 to 11. It's either 8 to 11 or 8:30 to 11. It's one of those. But if you're a trader that's like, or if you're someone that's like really new with ICT stuff, and it's kind of like overwhelming because it's a lot, I would just recommend one, having a journal, right? Because notes are very important. Just to watch the videos, that's cool, but to actually break it down and comprehend it, not just copy what he says, but like write or type what he says in a language that you can understand. Write it as if, like, think of it like you're writing it for yourself later, right? When you're watching a video and writing it, you're you could understand it a little better because he's talking it through you. He's talking it through. You can see the examples. He's showing examples. Yada yada yada. But a week from now, when you look at your notes, you don't want to look at your notes and be like, "Huh? What are you talking about?" You want to be able to understand. So, a journal, the 2022 mentorship, start there. If you're interested in like the other videos, those would be separate studies, but definitely start with the 2022 mentorship, because that simple model can be used with all his concepts. And then specifically focus on the time, like the kill zone stuff. Like if you're new with ICT stuff, don't try to trade all day, because if like, you don't want to be here from 9:30 to 4. I mean, if you are, that's you know what I'm saying, but I'm not trying to be here from 9:30 to 4. Like, however your work schedule is, whatever, just try to work around that with the AM kill zone or the PM kill zone. Like 9:30 to 12, that's normally a good chunk. Or you can make it even smaller, like 9:30 to 11 or 8:30 to 11 or whatever. The afternoon, like 1:30 to 4, or the last hour, like 3 to 4. That's normally a good hour too. Um, yeah, okay, we're not. I might go back on pause because we're not really. Yeah, I might pause it because we got 25 minutes now. So pausing now. All right, so nice push upwards more. Like that's great. Running into the gap or approaching the gap. This green box is order block again. Mainly the bodies of it, the body of it. I was really focusing on the wicks, but price did come back to retest that range and this gap. So, but see, those type of entries are those aren't really entries that I am good at because this type of entry for me is a fine line between like, oh, I got it, woohoo! Like this move would have been like, it got me in at the top of the OB, and then it would have been up how much points? 17 something points. And woo, yeah, great, right? But or right, I would have tried this, and it'd have been some shift in market structure somewhere, and I'm like, oh, and then stop is hit. So these entries are not my best, but I'm sure this is probably something ICT would enter with because he has that confidence that I don't have yet. Building it, but not yet. All right, so that gap is being, yeah, that should be ran. Sheesh. That's what's up. That is what's up. All right, see, now we're approaching the range of that weekly OB. You see? Oh no, not that. This. Nah, not that. Yeah, now we're approaching the range. So I'm gonna just take this off because we don't need that. Okay, so in this case, right, if we close above this day, this bearish order block that I was looking at, I will label it now as a breaker, potentially, depending on how the day moves. And me saying order block to breaker doesn't mean that it's an order block to a breaker. Like every violated order block is a breaker. That's not what I mean. Breakers are price action based, so they simply rely on a pattern of low, high, lower low, which takes the sell side liquidity of this low, and then higher high, and then a retrace to this high before going higher. That's what the building block of a bullish breaker is. We have a low and then a high. Then a low, if it's bullish, the low is ran because we need to run opposing liquidity. Then we need to break a high. So we basically clear both sides of liquidity. We clear the low first and then the high. And then price would come back and retest that high, which is this high is where the breaker would be. Right? This high before going higher. So that's what this is, right? Because in this case, we have a low, a swing low, a swing high, a lower low, and then a potential higher high, depending on how the day closes, and then a retest of this, at least from the high to the close of this bullish candle, coupled with this potential gap that's forming, but we need next week's data for that gap. But right now there is, if this candle were to close right here and another candle were to open, that would create a gap. So you can see a retest of this air potentially before going higher. Like that could be how the next day, like the probably early next week, right? We might have that expansion into this before potentially doing that and coming right back down. So because this same pattern formed up here, right? It formed up here because we had a low, a high, a lower low. This low took the liquidity from this low, and then a higher high. And this was with the CPI data, right? And it was Friday. The CPI data was coming out on Friday, so we consolidated the whole week, but we consolidated in the range of this, right? So that's what this was. This candle right here. bullish breaker. And ICT has it in his mentorship video. His 2022. I don't remember which one, but it's one of the recent ones. But see, even that bullish pattern with high time frame bearish order flow, which means price delivery, the direction the price is going, didn't hold up because we down. So it might be the same thing here. This, like what happened here with this up and then down, maybe the same thing that's happening here. A breaker form, we come up, some consolidation, then we go down. Maybe, I don't know, but I do still think we go down lower. So that's that. I'm not gonna have it done yet though, because I need the day to close before I just say it's a breaker. Yeah, up into that order block. That gap, that 4 hour, well, whatever time frame we draw it on, because it's on the 4 hours, it's on the 8 hours, it's on the daily, it's on the weekly, it's on the 1 minute, whatever time frame. But no, that's hit, so that's cool. Now what do we do from here? What's the game plan? Nice price delivery, that is nice. Yeah, that last real entry for this move was New York, but I wasn't really confident in playing this week, so I did not live trade this. Luckily, it's an up week, so when things go up and you don't trade, your portfolio's still up, right? Because everything went up. It only sucks when you don't participate when it's when it's down. That sucks. Alright, yeah, that is some expansion. Sheesh. Candles on a blue pill, that's crazy. That's crazy. Okay, so far we ran +2 standard deviation, and +3 would basically be filling this gap. So I think with my pre-market analysis, it's kind of hazy because I was sleepy during then. I'm still sleepy now, but sleepy during then. This is max range that I'm looking at. So roughly 39 something, 3900 or whatever. Going on up. Are there any retraces of any kind besides this one? No. What about the 1 minute? The scary 1 minute. I'm kidding. Okay, nothing really. Just order block and gap stuff. Okay. Cool. Alright, so since we're here, I think I'm gonna pause it and see if we either continue going up or drop lower. I don't think we drop lower, but yeah, we're approaching like 33 minutes now, so I'm definitely gonna pause this. Pause it. Alright, resuming. You see the dollar has run that range low and that sell liquidity we had, so that's good. That's what you want to see if we're going up on the indices. And now we have the forming. Let me see if I could. Yeah, we have the forming of a 1 hour potential breaker on the dollar. Why is that? Because the bullish one was the low, the high, lower low, higher high, retrace. This one is a high, a low, a higher high, a lower low, retrace, and then lower. That would be in this area roughly. So we had this swing high, swing low, a higher high, took this high out, and then this lower low. So if we close below this candle's low, then we'd expect a retrace into this area, around this gappy area, I guess, and then lower into this gap. So as the indices, if you want to see the indices roar or move higher, this is the pattern that needs to play out on the dollar. So that's what I'm looking for. So I'll just draw this here. This is the hour, so we have 48 minutes to close above below, but I'll still put it here regardless, because I think it may close below. If it doesn't, then I'll just erase it, and it's not a breaker yet. But it definitely ran that range low. yeah. So let's go back. What about the VIX? See VIX. Okay. Okay, it's kind of running that gap down. It's kind of moving it. Um, no, not the ES. No, I'm not there yet. No, this. Okay. All right. Yeah, I don't think there's much else for me to talk about. This is already at 35 minutes. So the where I had the draw on liquidity, right? The me thinking that we would sweep these. This was wrong, but the overall direction of price was right. So that's kind of that's what I'm hoping. That's what I'm aiming for. Like if my end projection of price is right, then on the in between stuff that could be tweaked. But as long as I could see or guess slash predict or whatever you want to use where price is going, I'm comfortable with that. So yeah, I think that's just this is it. That's all I got. I appreciate y'all for listening to this or watching these videos, whoever it is. I would recommend you to do this as well. Like, I'm sharing mine publicly, but if you want, you could just, if you have a YouTube account, you can create a YouTube channel for free, and it's not like much to do. You just, if you have a screen recorder or some recording software like OBS, you record it. You can private it. You can make the video private so that only you or whoever you choose can watch the video, but it doesn't have to be public. But I would highly recommend doing this if you have the time or energy. But because journaling, like writing your thoughts out, that's perfectly fine too. But to be able to look back at and listen to yourself talk, right? I mean, that might sound actually sounds a little narcissistic, but listening to yourself talk and seeing or hearing you say certain things, that'll make ideas that you have stick, whether that's good or bad, right? So I'm practicing discipline. Yesterday was kind of a waiver in that with this loss because that was not optimal conditions to trade, but you know, we're all human. So today, discipline, I didn't really chase, even though technically it wouldn't be chasing because yeah, confirmation and all of that. But yeah, that's kind of my overall thinking. Again, I appreciate y'all for watching this video. Thank you for giving me your time. I'm out.